Hi, I'm Conor Svensson, founder and CEO of Web3 Labs, and this is your Week in Blockchain on Monday, the 26th of April 2021. The leaders this week include the launch of a new CBDC task force in the UK, bumper yields are being predicted for Ether, Richemont, the owner of Cartier, and other luxury brands are getting more involved in blockchain, Facebook's Diem may be launching later this year. There's been another DeFi hack, IBM are finally making some noise about NFTs, and there's Engine's JumpNet NFT platform that's launched. The Bank of England and the Treasury in the UK have launched a new task force to explore digital currency. They're looking at central bank digital currencies, which would enable a new form of digital money to be issued by the Bank of England for use by households and businesses. This would work alongside existing cash and bank deposits rather than replacing them. The government and Bank of England have not yet made a decision on whether or not they're going to actually introduce this, but what they've done is they've engaged widely with stakeholders on the benefits, risks and practicalities of doing so. The task force plans to ensure a strategic approach is adopted between the UK authorities and in exploring CBDCs, and it will require close coordination among a number of different actors. The overall goal though of this is to coordinate and explore the objectives and use cases and opportunities presented by CBDCs to guide the evaluation and design features that must be included to support the goals of this, support rigorous, coherent and comprehensive assessment of the actual use cases for CBDC, and monitor the actual international developments here as well to ensure that the UK remains at the forefront for global innovation. This was a huge piece of news when it came out this week, simply because the UK is a very significant economy and very, very involved in the fintech space, and very much one of the global financial centres. The actual the ramifications of this are very significant. So it's really positive news to see that the authorities are really looking at the technology very seriously. And kind of related to this, PwC actually launched their CBDC Global Index, the first edition of this in the last week too. And the idea here is that it's an index it's really a report to measure a central bank's level of maturity in deploying their own digital currency. And so what they do is they've created an index that captures the central bank's progress, their stance on CBDC development, and actually public interest in a couple of use cases. The first of which is retail, which is where these CBDC currencies are actually held directly by citizens and corporates. And then the other is interbank or wholesale, which is where these are payments using CBDCs, which are controlled by financial institutions. So they're used there for payments, but also financial settlements as well. Within the report itself, they actually outline the traction by different countries for retail applications and wholesale. But it's a really interesting report to actually go a bit deeper in terms of where we are currently in the actual landscape here. In China, one of the regulators there has said that Bitcoin should be classified as a alternative investment. This is something that came out on Twitter, where Li Bo, a deputy governor of the People's Bank of China, the country's central bank there, said that Bitcoin and stable coins are alternative investments in the eyes of the law. So this is interesting, because it's them saying that it's not to be treated as a currency, but it's still to be treated as an alternative investment. And so there's that level of speculation that's included in this view there. We've also seen the Ether, the cryptocurrency, reach a new record high this week of topping $2,600. The reasons perceived for that is that the market anticipates there is actually going to be a supply drop of the Ether cryptocurrency that powers the Ethereum network when this EIP 1559 upgrade comes live. We've spoken about this previously, where in effect what's going to start happening with this fork that's currently planned in July, the Ethereum miners their fees will reduce, and what will happen is the actual Ethereum network will burn some of the Ether that gets used in transactions. This will ultimately drive down the price for users of the platform and create a fairer, more equitable environment for people transacting with it. But there's been a bit of controversy because some of the miners aren't so happy with it. But right now it looks like it's going to go ahead as planned, and the good thing here is that it brings down transaction prices, but also it seems that it's had increases the actual value of those of people who actually hold Ether already. So there's perceived as being quite a few positive benefits there. Something else that also came out was a tweet by Justin Drake, one of the ETH2 researchers, who's played out some models talking about where how the Ether price could be affected by what's being called the merge, which is when the current power-hungry Ethereum proof-of-work network merges with the new ETH2 proof-of-stake network, which hopefully may happen later this year. And the anticipation there is that staking fees for those who are actually already staking Ether could go up to as high as 25% APR by his conservative estimates. So again, another area which has drawn in a lot of interest there. That being said, against this background of all-time highs, we've also seen a big market sell-off in the last couple of days, with Ether dropping down now to below $2,200 and Bitcoin as well going below 50k for the first time in a while. IDC have released a new report, and they estimate that global spending on blockchain solutions will reach 19 billion by 2024. This is compared to an estimate that was at 6.6 billion in 2021, with a compound annual growth rate of 48%. One of the fascinating things in this guide is it talks about as well which industries they see the most traction happening in blockchain too. And so banking is very much so at the forefront, which accounts for 30% of the worldwide total of spending estimated in 2021, and they anticipate that will remain the case. The primary use cases being seen, according to their report, are cross-border payments and trade finance. And then apparently next up is manufacturing, with 20% of the spending, and lineage and provenance are the main use cases there. But they do anticipate that there's going to be significant growth in other sectors, and government, healthcare and professional services is where we see the most impact. Moving on to crypto-specific news, Venmo, the widely used payments platform owned by PayPal, is now accepting crypto, so their 70 million customers can buy, sell and hold cryptocurrency using the Venmo app. Initially, it's only supporting Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. Again, it's just an indication of the popularity of cryptocurrencies and companies wanting to offer these to consumers based on demand there. Also seeing 3 Ether ETFs have begun trading on the Toronto Stock Exchange. 3 firms producing these received the green light from the Ontario Securities Commission last week. This move follows shortly after the same regulator actually approved Bitcoin ETFs earlier on this year. So although this hasn't happened in the US market yet, the fact it's happening in Canada, which is a very positive sign. Time magazine have also announced that they accept crypto for the digital subscriptions. This is something that we've brought up in previous editions, how Time magazine's getting involved more in the crypto space with accepting payments, and now what they've done is they've paired up with crypto.com, who provide the crypto app, and people can pay using crypto to provide 18 months of access to unlimited content on their site. WeWork too have announced that they're getting into the crypto space and will start accepting crypto for payments, and will actually add the funds directly to their balance sheet rather than trade them out into a fiat currency, which is often what happens with a number of companies. The German telecoms company Deutsche Telekom has also announced that it's bought a number of CELO coins for the CELO blockchain platform. The purchase was made through their innovation pool, and although they haven't commented specifically on the purchase as such, it's very positive to see a large corporates getting involved in the fundamental crypto economics associated with this project by actually investing in the coins there. What CELO provides is a blockchain platform that's really focused on developing world applications with those individuals who don't have access to things like banking and so on. And so they provide like a pegged stable coin, but also they run as a blockchain network. Again, positive news to see this institutional interest. Also in the UK, the 110-year-old asset manager Baillie Gifford has invested 100 million in blockchain.com. They're one of the UK's most prominent prominent asset managers, and they have 445 assets under management. Another piece of UK-centric news, the major UK bank NatWest announced that they wouldn't be serving businesses that are dealing in crypto. This was via the Guardian newspaper, but then afterwards they came back and said it wasn't the case. But I think more and more generally, when you hear about HSBC has been taking quite a conservative approach towards crypto, and then also hearing as well NatWest doing a similar thing, there's a bit of a contrast there with what some of the UK banks are saying compared with the American banks, for instance, such as Morgan Stanley and Goldman's, and of course JP Morgan, who are really sort of diving in to the asset class. And the Cartier owner, Richemont, which is the second largest luxury conglomerate in the world, they've actually spoken about how they worked with NFTs on an Ethereum-based platform, partnering with Ariane for these Vacheron Constantin luxury watches. They made use of a Ethereum platform for this because they wanted to actually target consumers and provide transparency. Hence, it made sense for them to actually work with the public Ethereum network. Also, Prada and Cartier have joined the LVMH Aura blockchain consortium, which is focused on addressing counterfeits. It was launched by Microsoft and Consensus in 2019, and consumers can view details of the authenticity of an LVMH product by scanning a QR code that's on the label, and then this is via an app which then provides the full story about the actual item, covering like the raw materials that we used all the way through to manufacturing and production. It's also got information about product care and warranties, but it's just great to see this, there's more and more traction occurring with this very valid use case of the technology. There's also been news about the Facebook-backed Diem project planning to launch a digital currency pilot later this year. The intent here is that it will be a stable coin that's actually pegged to the US dollar. The association Diem, formerly called Libra, is actually based out of Switzerland, and they're in talks with the Swiss regulator about securing a payment license. Details aren't actually public of this yet, but apparently it's going to be small scale and focus on transactions between consumers. Also, the Swiss exchange SDX, the Six Digital Exchange, has joined the Enterprise Ethereum Alliance. This was interesting news because they had previously spoken a lot about their work with Corda, but now they're also looking to extend how they're using these blockchain platforms, simply because of the amount of traction that you're seeing on Ethereum for digital assets. In the world of public protocols, Cardano and Polkadot have really started to establish themselves in a report that came out on the website Staking Rewards. Cardano is currently the top blockchain in terms of staked value, with roughly 26.4 billion of Cardano's ADA token allocated to securing the network. And then Polkadot is coming in second with about 22.7 billion worth of their DOT token lot, which is about 64% of their circulating supply. Between the two of them, they currently represent 7.9% of 620 billion in crypto assets that's designated for staking across the overall space. Ethereum 2 is currently the fourth largest asset class with 8.2 billion staked. However, we're likely to see this number significantly grow as the cut over to the ETH2 network becomes nearer. Also in the Polkadot news, there's a number of new offerings that are set to hit the market in the next month or so too, with a view to taking on some of the activity that's happening across Ethereum and Binance Smart Chain. And so these include the Akala network, which is a DeFi hub on Polkadot, Moonbeam, which is a new smart contract platform, and also Clover, which is another platform for running applications on top of it. So again, there's been a lot of pushes growing the ecosystem there. So it'll be fascinating to see how Polkadot grows over the coming months and years. In DeFi news, the decentralized exchange Uniswap has hit a record $10 billion in weekly trading volume, which is a 26% increase over the last 7 days. However, the competitor PancakeSwap volumes are more than double Uniswap currently. Uniswap, though, is also in preparation for its big V3 go live, which we discussed here previously, which is due to happen on May the 5th. and they've also started deploying their contracts for this upgrade to the Ethereum testnets to actually do the testing in preparation for this. Also, one of the projects that we've mentioned previously, Cream Finance, have put up a 1.5 million bug bounty to improve DeFi security. Back in February, we discussed how they'd lost 24 million from hackers due to a bug in one of their smart contracts. The DeFi Protocol EasyFi has reported a hack and actually lost over 80 million in funds. The blog post from the CEO and founder said that the hacker had actually transferred out almost 3 million tokens, which were worth $25 a piece at the time, which came to this total of around 80 million. Apparently, the hacker actually managed to get hold of the private key for one of their wallets there, rather than doing it via a different mechanism, such as exploiting a bug in the smart contract. So again, it's just testament to the different attack vectors that people need to be very across when they're running these projects. The NFT world, JumpNet, Engine's new gas-free blockchain, has got over 50 projects within its first 2 weeks of launch. Engine have been involved in the blockchain space for a while, and they are actually co-creators of the ERC 1155 token standard, which is a token standard that enables you to have a contract that manages both fungible and non-fungible tokens using the same contract. So it provides a lot more flexibility than just saying we're going to go with ERC20, which are fungible tokens, and ERC 721, which are non-fungible. What they've done is they've spun up a Ethereum compatible blockchain which doesn't have gas fees, but and they've been able to get significant traction with that. So they've got companies who've already started using it, which include Microsoft, Binance, OKX, Blockdown, My Metaverse, and MetaverseMe. And so this will be definitely a platform to watch. The patent market platform, IPwe, has partnered with IBM to launch NFT patents. The patent records will actually be stored using IBM's blockchain technology. I think the interesting thing about this piece of news is that there hasn't really been a lot coming out from IBM in the space of NFTs, and so although this is just an announcement at this point in time, it shows that potentially there is some interest in companies trying to build some applications on top of IBM's blockchain technology. Also, the Bitcoin-based NFT game Infinite Fleet has raised 7.2 million so far. This is a PC game that's focused on collectible spaceships that players can purchase, sell, and use within the game. In terms of the metrics this week, we've seen the crypto market cap is down 6.6% to 1.82 trillion. The assets locked in DeFi are down 12% to 52.9 billion, and then the NFT sales are down roughly just over 22%. Where we've seen over 25,000 sales with an average price of just over $1,300. That's all we have for this week. If you like what you hear, please subscribe to our podcast and our YouTube channel. Links to all items discussed will be available in the show notes and on our website, weekinblockchain.com. We also host a weekly Clubhouse session every Monday at 12 p.m. Eastern and 5 p.m. UK time if you'd like to discuss any of the items we've covered here. Thanks, and I'll see you next week.